US dollar continues to show signs of strength again. Before we start, a quick word from our sponsor. This video is brought to you by XNS, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The euro has fallen a bit in the early hours on Wednesday as we continue to consolidate between the 1.05 level on the bottom and the 1.06 level on the top. Because of this, it looks as if the market is trying to sort out whether or not this extreme low will hold like it has over the last roughly 2 years or so, or if we finally break down. If we can break back above the 1.06 level, then I think it kicks off more of a recovery phase, and the market will probably bounce towards the 1.0750 level. On the other hand, if we break down below the 1.05 level, this would be a very bad sign for the euro. And while you could short the euro against the US dollar, what it probably means is that the US dollar is going to start punishing everything else again. And basically, your currency play is just to buy the dollar against pretty much anything you can. The US dollar has risen against the Japanese yen yet again on Wednesday morning, as we are now above the 155 yen level again and looking fairly strong. At this point, we are a little stretched, but ultimately, I think each and every time this market pulls back, it is going to attract a certain amount of attention due to the fact that the interest rate differential favors the United States so heavily. Furthermore, we've recently had the so-called golden cross when the 50-day EMA crosses above the 200-day EMA, so longer-term technical traders are probably watching that as well. The Australian dollar initially did try to rally during the trading session, but it has fallen back toward the 0.65 level. There is a lot of support just below, so I don't necessarily think this market has anywhere to go. And for what it is worth, the stochastic oscillator has crossed in the oversold condition in the last couple of days, so that's part of what we've seen play out in the price action, but we still have a lot of work to go if we think this market is going to just simply take off to the upside. The 0.6650 level is an area where I think a lot of action could be found due to the fact that the 50-day EMA and the 200-day EMA indicators are both parked in that area, and we just had the so-called death cross form, which of course is a very negative turn of events when the 50-day EMA crosses below the 200-day EMA, although I'm the first to point out that's typically a very late signal. My name's Christopher Lewis. I work for FXEmpire. If you enjoyed the video, give me a thumbs up, and if you want to see more analysis, make sure to subscribe to our channel.